Hello, and welcome to Legacy Curious, where we explore the personal legacies of everyday people, offering them a platform to share their life stories, final messages, and hopes for the future. I'm your host, David Gravelle. In this episode, Scott MacDonald of MacDonald Financial Solutions joins us to talk about key person coverage, infinite banking strategies for small and medium-sized businesses. I hope you watched our interview with ChatGPT on these same topics because we're pitting man versus machine in this conversation of how best to protect a business's future, turn an expense into an asset, and tap into new sources of funding. So let's welcome Scott and get started. Hello, Scott, and welcome back to Legacy Curious. Thanks for joining us again today. And this is our second episode of our Foundation series.
Yeah.
And I'd like to talk to you about the new capabilities of life insurance policies that you alluded to in the last episode. And specifically, I'd like to ask you about key person coverage and infinite banking strategies for small and medium-sized businesses. And we can
Got it.
consider this our man versus machine episode as a response to my interview with ChatGPT on the same topics. So what are your thoughts on Keyman and how it fits in with infinite banking for these kinds
Yeah.
of businesses?
Yeah. First of all, David, thanks for having me back. Always a pleasure. So, as a business owner for 20 years now, I realize the importance of Keyman. And I also realize what happens when you don't have it. I've kind of been around a little bit. I know I'm aging very well. Thank you very much. But it's really one of those things. So the concept was, if you are looking, there's a lot of small businesses out there that are family owned, right? And so I think family owned businesses are very, very good, what I would call candidates to take advantage of this. You also have businesses that have partnerships, or you have other things like that. Maybe so the definition: key man, key employee, key whatever you'd like to. And the concept really is, and I hope I do as good of a job as ChatGPT, by the way. I'm not sure if I'm nicer than ChatGPT or harder to understand or make more mistakes, probably. But the concept of it really is allowing the company and the business to continue, all while making another spouse or partner or other interests within the company whole. And so it is a very inexpensive strategy where it is typically, or at least has been typically, viewed as an expense. But then, so for example, let me tell you in my business what I was able to do with this, David. So I had before I sold this several years ago, I had an IT and cybersecurity company, and we had become the fastest growing in the state. We're actually number 2 in total volume. And I had an employee that I had hired. He was a friend of mine, but I knew that we were working towards he was going to buy the business. And so the situation was, we had me and my wife. I was running the business. My wife really was just associated by marriage. But what would happen is, if I were to have ever passed away, the company would have very likely gone downhill without something specifically in place, right? And so, because we had the foresight, what we looked at doing is, we're going to fill out a purchase and sale agreement contingent upon my death, and it would be based on an amount, whatever it was assessed at when we do the assessment value. But we kind of had an idea where the assessment was, what was going to happen, say in 5 years, based on our projections. And what happened is, if I were to die, my wife would get the death benefit, which was going to be the equivalent of what the cost of the company was going to be. And then my business partner would have taken over the company. So basically, we had the sale done before it ever happened. Now, as it turned out, thank God, I lived, didn't have to exercise that, and he still was able to buy the company. But these are ways specifically in businesses where it's family or where it's friends or most times a small business here in middle America, or really just America in general, most times small businesses, they know the person they're going to sell to. I mean, it's kind of one of those things. And so that is where I love the key man concept, because really for just a minimal amount, you can do a whole lot, especially that securing your future and knowing I don't know what it's going to look like, but I've got this right here that should something happen, wife and the family is taken care of, the employees are taken care of because they know exactly what's going to happen. So I don't know how I did versus ChatGPT, but that's what I got there on that.
ChatGPT didn't have a personal story, and I think that helps our audience, because the people that I'm sure are watching this maybe own those businesses and have those same types of setups. And
Yeah.
so that's a term policy. Did it have a living benefit with it? If you had gotten sick or weren't able to work, what would happen then?
So this is now the beauty of what I talked about before. We have your typical insurance, kind of like your father's insurance, right? Or your grandfather's insurance. And those kind of policies, like you had to die to use it. And so I guess that was kind of expected back in the day, but the industry has changed. And we have now a couple of options. One is we have the living benefits, which allows the person, and this is a beautiful part, allows the person, if they were to get sick, if they were to have a critical or terminal illness, they haven't died yet, but we have policies that you're able to take up to 90% of the death benefit while you're still alive. And so it really allows for, hey, if anything unforeseen happens, you have that covered. The other thing, and I'll tell you, I don't want to take up too much of your time here, but the other piece that we're really seeing catching on over the last year or so has been the infinite bank concept. When it comes to small business, infinite banking is what people are doing now, using life insurance in a new way. And it shelters the business from taxable income. It shelters the business from risk. And it also captures the almost 5,000% that their banks make over 30 years on every dollar they put in.
Wow.
And by the way, one of the benefits is it is also life insurance, so you can have your key man component to that as well. So it's a fantastic piece, because now you're looking at, and as we've run this, and I don't want to get too much into this right now, but as we've run these scenarios, literally a business does the same, continues business the same way. Their receivables come in, they deposit this through their insurance policy back to the bank. By adding that one step, we're able to see them within 4, 5, and 6 years get completely out of debt, get their liens off of their homes as collateral for operating expenses and other, loans from the bank like that. And then we're also able to see within 10, 15, 20 years, that asset base growing to millions of dollars, that when they're looking at selling, when they're looking at doing something, not just the business stands on its own, but now we have an asset class that can be attached to the sale or can be taken. And now you have money by doing the same thing you do every single day. You have now two assets. One is your business, and one is you're taking that money from the banks and you're making it yourself. That's it is. I could talk about that part all day.
Yeah, and we will, Scott. We'll have an episode right after this that's specific to that. And so thanks for joining me today. I want to thank you for listening and invite you to get involved. Subscribe, like, comment, and share this video. And remember, if you or someone you know would like help developing your legacy plan, or to have your story told on this podcast, email us at legacycurious@gmail.com.